Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. We'll do here's a quick market update. We'll look at the big guys and what's taken place in the last couple of days, and then we'll look at some fresh little guys and see what opportunities may be there. There's a few. There's, I think, 11, if I remember right, this week. See if there's anything that will give us a chance to get some trades on. So before that, though, like we always start off, I thought this was appropriate, especially with the timing and how the market's kind of been lately. It's sometimes you just have to bow your head, say a prayer, and weather the storm. Market's been a little bit crazy the last couple months, a little chaotic. It's always chaotic, right? We always kind of go through this, but sometimes it gets a little tougher to trade than others. It's always challenging, but there are periods where it just kind of goes back and forth, and there's no real clear direction, and it does make it tougher, no doubt. When it's in a nice clear direction and there's a trend that's in place that's obvious and solid and going one way, it just flows better and everything seems to work well. So, but it is what it is. We don't have any control over the market, right? We just have to accept what it is and deal with the situation as it comes at us. So, with that being said, let's get to the charts and the S&P. As you see yesterday, took off and rallied, and it just went up. We got a nice little kind of basically a mat hold there. Even though, I mean, we've only got 2 days before the pattern shows up to the upside, so it wouldn't technically be a mat hold because a mat hold's a continuation pattern, right? And essentially, I know we covered this the other day as far as how the emotions of the pattern, but you got the bulls on this day of the pattern are excited, they're happy, they're pushing it higher. And then there's a couple of stall out days, a couple of days where it's like, we're going to think about this for a little bit. And then boom, the last day of the pattern, there, that last candle, the bulls come in and are happy again. So they were happy, they kind of went, we're not sure about this. And then boom, they're happy again. It made a new high relative to the previous high a couple weeks ago. So yeah, on a short-term basis, but we're still neutral because we have a lower low if you look at just the last 3-4 weeks or so. But the reality is that with the S&P, we are in a slight downtrend over a short term over the last couple months. Longer term, I mean, if we look long term, we're still in an uptrend. Even though it has been, well, it depends on which line you go with. It's been broken to a certain degree. But realistically, the overall market is pretty much neutral. At least the major indexes are. NASDAQ's very similar. Industrial's basically the same. The transports on the Russell are the two that are a little bit off the rails, as we keep talking about. So transports are more bearish than anything. So in the VIX, see what that's doing. Nothing, basically. No surprise. So let's go over to look at the big guys real quick and see what we've got going with them, if anything has popped or materialized. And AEP is close, right? It hit the entry point just barely today. Depending on where you decided to enter, if you did, then if you waited for the close, you probably wouldn't be in this. If you didn't, you might be. So we'll see. Hopefully it plays out. If you did get in, AET, still kind of just dancing around that level. ALB broke out to the upside Monday, then pulled back Tuesday a little bit. And it's just, I'm not terribly excited about this because it's been on such a tear to the upside that I think the odds are it's going to go sideways more. It's more likely to go sideways than it is to run to the upside. But at the same time, it could take off and rally big time. So how do you deal with that fear? and we've talked about this often here, is you deal with that fear by maybe taking just a small position, maybe picking up just 1 or 2 contracts, because at least then you're there and you don't have to worry about missing the opportunity if it does take off to the upside. Alaska, I still like the looks of this. I like the fact that it's danced around the last couple days. Volume, we're between Christmas and New Year's. Volume's going to be light, so not really paying attention to the volume. AMSG, going the opposite of what we're looking for. BPL, Buckeye Partners, oil and gas. This is actually relatively strong compared to most of the oil and gas companies. But looking for a bearish move, looking for it to drop back off. And it's been dancing around that entry point line the last couple of days, so we'll see if it continues what it looks like. Cardinal Health needed to pull back, and technically Monday it did. It gapped down a little bit, tagged the entry point, and then rallied, and then hit the target Tuesday. Woulda, coulda, shoulda, or realistically being able to catch that and look at it and say I'm going to get in there when it's gapped down and dropping down, it's really hard to make that decision. So it's easy to look at this historically now and say, oh, we should have done this. Well, yeah, there's a lot of things we should do. Question is, would you have in reality in that situation? And the odds are you probably wouldn't have. I wouldn't have either. So CNI, Canadian Natural, Railways and other transports, the odds are that this is going to head down. The whole sector is bearish. The stock essentially has been bearish. And so the odds are on our side, playing the bearish side, and that's why we've got a bearish setup. And the fact that it's got a shooting star or Harami, lots of different bearish patterns there that indicate weakness. Canadian Pacific Railway, now here's the opposite. But again, at the same time, it's really not, because this could very easily flip and head to the downside. And I'm completely prepared to flip this trading plan over and look at the downside in Canadian Pacific. We'll see what market conditions look like. Facebook bouncing up to the upside, was looking for it to actually break down, but we'll see what that brings in the next few days. General Mills, waiting for a breakout to the upside. We've got that long-term ascending triangle. We'll see if that plays out at all. What's this? LyondellBasell, LYB. Needed to bounce back up, but not terribly excited about this one. This one I love the looks of. We've got a nice, clean, symmetrical triangle. Breakout to the upside. The only thing that's missing is volume, but that's not necessarily something to worry about at this point. So, and that's one reason, a little bit more skittish this week than most, just because of the fact that it's a holiday week. You never know what the new year will bring. Northrop Grumman, another one, ascending triangle. We've got 2 or 3 of them here. And that has broken out and closed above that resistance line, but what happens next, we'll see. So Cena, another one, we're just waiting for that to develop, just like General Mills and the other ones. And Union Pacific, again, waiting for a breakout of the midpoint from the double bottom pattern. So we'll see. Some of those may be right for Wednesday. We'll see what they bring. Little guys, see if there's anything that they may pop on Wednesday. AES is the first one. And I don't have the lines, for some reason, are all messed up. Hang on just a sec. Okay, forgot to adjust that number there, so the entry point. So, but looking at AES, and just looking at the bigger picture, you can see this thing has been as high as 65 back in 2000, but it got trashed with the rest of the market back then, all those years ago, and then it kind of recovered back up to 20 or so, but now it's been kind of bumping around the 10 to 15 range over the last 5, 6, 7 years. So looking for a potential bounce to the upside. We've got kind of a miniature little inverted head and shoulders. I wouldn't call that. I mean, you could, and a lot of people would look at that and say, look, there's an inverted head and shoulders. And I don't think on this short-term basis, I mean, over a 2 or 3 week period, I wouldn't consider that a head and shoulders or an inverted head and shoulders, but yeah, we could possibly use it. And it's, if there's enough there, and that's about where it would land anyway. If you created it, if you treated it as a head and shoulders, would be about $10. So Could also be a double bottom if you look at it from a candlestick standpoint. It just depends on what you want to see, and it really doesn't matter. You're talking 50 cents of potential. It's not a huge thing. This isn't one I'm jumping up and down about. But if it pulls back a little bit and gives an opportunity, there may be a good trade here. There may be a possibility to make a little bit. And if you only pay 70 cents for the option and you make 20 cents on it, you're still making, that's a killing, is it not? Was it 25% or so? 30%, something like that. So it's easy to discount these little $9 and $10 stocks that have a 50 or 60 cent potential. But the reality is you can still get a nice return out of it. And if it really takes off to the upside and goes crazy, which we know they do sometimes, right? Then you really make a killing. 25, 30% is a darn good rate of return, especially if it's only for a week or even a month. But if for some reason it goes from 9 to 11 or 12, you just made a 2, 3, 400% return. Those big, and we all hear stories about these big giant wins and these windfall, and a lot of them come from this. A lot of them come from these small little stocks that for whatever reason go berserk to the upside unexpectedly, and we almost never know when it's going to happen, and they don't happen very often. You're going to get a big, generally speaking, you have a huge windfall once a year. And then once a quarter, you have a pretty sizable trade. The rest of your trades are pretty much kind of back and forth. And the reality is that it takes a lot of people a long time. It took me a long time to grasp the reality that the vast majority of your trading profits will come from a minority of your trades. You're going to have probably 10 or 20% of the trades that you do will make up for 80 to 90% of your profits. It's just the reality of it. And the rest of them, it's just kind of back and forth. It's really not any different than baseball. When you look at batting, even a guy that hits 300, getting a base hit 3 out of 10 times, the reality is the vast majority of those are singles. That 300 batting average, a small percentage, probably 5 to 10% of it, maybe 20, would be home runs. And so the reality is that when it comes to trading, it's a matter of stepping up to the plate, swinging the bat, and just looking for opportunities to get a hit, to hit the ball, to connect, and put the ball into play. And once in a while, you're going to swing it just perfectly. Everything's going to line up just right, and you're going to hit a home run. It's just the reality of it. Once in a while, it's going to happen. So, with that being said, don't discount these little guys. I love these things. AMAT, I love the looks of this. We're in, over the last few months, a nice bullish trend. It's had a nice healthy pullback in the last few weeks. Now it's back up pushing against that 1926. Again, perfect example of, 65 cents of potential on a $19 stock. Doesn't seem like much. But if your options are only $1 and you collect 40 or 50 cents out of it, you're making a really nice healthy rate of return. The only concern I have with this is that it's in the last 6-7 days, it's run quite a bit. It's 18 to 1926, but that doesn't mean there's not another 50, 70, 80 cents out of it. So, and running up to 20, a nice, pretty round number, could be perfect. So we'll see what that brings. Atmel, another one looking for a breakout here. It's been going sideways the last several weeks. Again, and this one, it's an $8 stock, $9 stock, and we've got, 13.56 cents of potential. So, again, a decent chance for a nice, healthy rate of return. Coach, a little higher priced, but still looking for a potential breakout to the upside. We've got kind of a little pennant pattern going on. We've got lots of different things. You've got a little bit of a triangle on the longer-term picture, but it's gone sideways before that, so I kind of discount that a little bit. So just looking for the potential. I think there was something with moving averages. Yeah, there we go. Usually when it's not super clear on the price chart, there's something else. The 200-day moving average is acting as resistance right now. So if it breaks above there and then gets above that 33.66, the resistance area, then that's where I think there could be some potential for upside here. GE, same thing. Long-term picture, not an all-time high for GE, but getting there. It's fighting for it. and you can see it's been just really slow ascent. Volume's been light after that big push back in, September or October, November. Big increase in volume. It's been going sideways since, and it just broke out. So we'll see if that continues. Host Marriott, this is a rollover from last week. We have it bouncing there at that 1550 range, headed up, so we'll see if that goes. This one's got a nice big potential, almost $2. 15, basically 16, $1.75. So this one looks really nice. I love this one. This one as well. This is one of my favorites on this list, the little guys list, Horizon Pharma. It is a biotech. We've got a nice little ascending triangle. Even though it's been in a downtrend, sometimes the ascending or descending triangles will act as reversals. And this is a nice clean one. We've got a very consistent, very solid resistance there at 2230 or so. Nice little uptrend going up, about $7.50 of potential. You could realistically, and maybe I've taken the aggressive side there. Maybe I should have taken this one here. That'll probably put us right at, yeah, and see, that's about the range. So either way, either one you take, I put the target at 2750. If the target's actually at 30, then okay, because I'll be watching it. If it gets to 2750, I'll be watching it closely. If it slows down or gives any kinds of weakness, I'd be exiting most of the position, but leaving some of it there in case it breaks out and runs to 30 or even higher. So, and this is a biotech, pharma, pharmaceuticals, biotechs have big upside potentials sometimes. They also have big downside potentials. It's all relative, right? Because if they have a drug that's in the pipeline and it gets approved or it gets some type of fast track or something like that, that's usually extremely positive news, and the stock will gap up or it'll run up very quickly. If they have something in a final phase trial and that falls out of trial or something goes wrong with the testing, then it will gap down or run down big time. So just be aware of that. I'm mentioning it again because pharmaceutical and biotechs can give extra risk. They can be riskier than normal stocks because of that. And this is where sometimes, even though I'm not a fundamentalist, sometimes doing a little fundamental research and digging into the company and finding out what's in the pipeline and what it's got going sometimes can save your backside on these type of companies. So if you're going to trade the pharmaceuticals or biotech companies, especially the smaller ones that are less known, I mean, a Pfizer and Eli Lilly, yeah, they got so many drugs in the pipeline that it's probably not a big deal if they have one fall out. But some of the smaller ones can be much more risky. So keep that in mind and adjust accordingly. NCR, nice little mat hold to the downside, looking for a bearish move. Needs to pop back up just a little bit. So, well, I guess it's only a few pennies off, 10 cents off. So, and there's about $2.50 of potential here. So a couple pennies is no big deal. 10 cents is no big deal. 25, 30 cents actually is where I would stretch it to. Oasis Petroleum, as most oil energy companies have been beat up, this one has as well. Looking for a potential double bottom, looking for it to bounce to the upside and possibly take a quick run like it did back here. Could just be a simple short covering rally. So hard to say, but it's got to move to the upside first before looking at that one. Prologis breaks out to the upside on Tuesday, and not quite an all-time high, but we're approaching it. There we are, pushing the bands. That's what I was looking at. Breaking out. Indicators are all looking bullish. It's broken out of that 43.27 area. So we've got some potential up to about 45.30 or so, 45.40, somewhere in there. And last but definitely not least, Verizon. Approaching looks like an all-time high. Yes, it is. Approaching it, not there, but we're looking right around 50 or so. Is at 49 and change, probably 50 intraday. Yeah, we've come up and tagged 50. But looking for a push to the upside to about 48.20, so a little more than $1 or so potential. So Verizon looks good. It's got to pull back a little bit before it justifies it, but other than that, so got some decent candidates, decent little guy candidates for the rest of this week and early next week, and we'll see how they play out. So with that being said, I'm going to call it a day, and we will see you all very, very soon. Take care. Bye-bye.